Yo, what's up everybody? It's Mario here. I'm back. So really quick, we're going to talk about my top 3 investment tips that helped grow my portfolio by over $65,000 in the last year alone. Now, in the world of GameStop and AMC, all these stocks, I understand that might seem like little gains to most people, but to me, that was a decent amount of money. Before we hop into the video, if you could do me a favor, just really quick, just like and subscribe to the channel. I promise I'm gonna produce a lot more and a lot valuable content to help you accelerate your portfolio. And also, if you stick around, I'm gonna reveal to you the #1 stock that I've had in my portfolio that's returned to me 400% in this year alone, and it's still growing and it has plenty of room to keep going. So if you're interested in learning this stock, stick around and I'll reveal it to you at the very end. With that being said, let's get to the video. All right, so tip #1 is going to be protect your investment. So one way you need to protect your investment, right, it's a strategy I like to use, is no more than 2% of your portfolio overall into a short-term trade. Now, of course, this is going to vary. It depends because everyone has different portfolio size, right? So my portfolio is over $100,000. So 2% to me is a lot different than 2% for someone who has a $1,000 portfolio. So for anyone who has $1,000 or less in their portfolio, I recommend that you up that to at least 10 or 20% because ultimately we're in this thing to make money. No one's coming in here just to make $10, $15 over the year or something like that. No, that's pathetic. You want to make money. So if you have less than $1,000, up it to 10 or 20%. What that also means is that you don't necessarily have to have less than that in each trade. But for example, just say you want to bet the entire $1,000 that you have on one single stock, right? Not necessarily recommended, but if you have the money to do that, and if you're just trying to begin, it's your money. You ultimately do whatever you want to do. But if you're going to do that, what you can do is set your stop loss to that you won't lose no more than $200 on that trade. But you get the exponential growth, especially if you're doing options contracts. So at the end of the day, we want to make sure that we're protecting our investments. We don't want to lose everything all at once. Because this is the thing, we're going to miss out. You have to accept that you're going to leave money on the table. Everyone has this story about, oh, I sold GameStop at $40. Oh, I bought Bitcoin at $200. You're going to lose out no matter what. But the thing is, you have to accept that right now. You are not going to make maximum profit. No one will. There's too many variables in the stock market. You have to understand that the stock market is made up of millions, billions maybe, of buyers that's just buying and selling simultaneously. You never know when people are going to stop buying and when people are going to start selling. So give up the fact of you're going to sell at the top and buy at the bottom. It's never going to happen. So with that being said, you should go in each investment, if it's long-term or short-term, but more specifically, if it's a short-term play, thinking about how much do I want to make on this particular investment. For me, I like to, if I have an options contract for the most part, because I love to play a lot with options, if I double my money, that's when I update my stop loss. I'm gonna go over at the end of the video how to update a stop loss so that if the market triggers and you're at work or you're doing whatever you're doing and you're not able to monitor it constantly, it will automatically make a sell for you. So you lock in your gains and you don't have to worry about it. But one side note is you have to make sure you set this stop loss correctly, because sometimes you could trigger a market order, but it doesn't execute and you can be left holding the bag. Tip #2, educate yourself. It's so many times I see beginner investors jump in the market and they just throw money at whatever hot name they see coming on. Sometimes you can get lucky. Honestly, you can, because ultimately in the stock market, it's all about probability, right? And that's one thing you need to understand first. It's all about probability. No one knows the direction of the stock market. No one knows if it's going to go up, if it's going to go down, if it's going sideways. No one knows. Period. Dot. End of story. There's so many predictions of a stock market crash. It's ridiculous. If you look up stock market crashes, as far as the news and all these predictions, 99% of them are wrong. And they were out of the market waiting for it to crash in 2013. And it's been on the longest bull run in its history, and it's still going higher and higher and higher. So back to the education part, that means you need to first understand that no one knows what's going to happen. So the only thing you can do is focus on what you can control. What can you control? You can control how much you gain, how much you lose when the numbers hit those marks. Also of great importance is to understand two key concepts in the knowledge of stocks, and that's going to be fundamental analysis and technical analysis. Fundamental analysis deals with the stock as far as its cash, the intrinsic value of the stock, right? Is it growing? Is it making sales? What's its future earnings potential? The brick and mortar business, right? If it's actually making money. The value of the assets it has, the value of the patents that the company holds. And also the biggest thing with fundamental analysis is it's all about macro data. So you need to understand, job reports, right? GDP, gross domestic product. Then also you need to understand the metrics of the particular industry that the company that you pick is invested in. So for example, if you're investing into a solar company, then you need to understand what's the climate of the solar industry, right? Is the administration that's in office more friendly of this type of company or against? So these factors will change the profitability of the company because, for example, if you're into solar or alternative energy right now, your stocks are going to do well because the current administration is making sure that they change and reduce the greenhouse emissions. So if you're in that space, there's a lot more growth opportunity to where if you bought a coal plant or a coal company. Technical analysis. Now, me personally, I don't do a lot of technical analysis. I am updating my mind when it comes to this type of information because it's very important, because ultimately fundamental analysis only gives you one part of the picture. A lot of old school investors, like the Warren Buffetts of the world and all the older hedge fund investors, they're always looking at things like price to earnings ratio, enterprise value over earnings, things of that nature. But the thing is, ultimately what matters is, are people buying the stock? So when it comes to technical analysis, the most important thing is volume and price action. And it has a good point, because you have to think about this. The stock market is made up of emotional humans. We're not fully rational. We don't know all the details of a company as well, but what I recommend, a good website for information about technical analysis is investopedia.com. They lay out things very beautifully. They have so many different tutorials and small videos that help you understand charts, patterns, timing, how to get in the market. Now, I personally don't believe that you can always time the market correctly. Now, there have been people that's done it, but not consistently over time. But the thing is that there are times where it's more than likely that this stock is going to go up than down. But again, no one ultimately knows. But history doesn't repeat itself,
but it sure does wrong.
So again, just make sure that you're understanding your knowledge, right? And constantly learning. You need to learn about the latest news, the latest headlines, especially if you're trying to be an active investor. If you want to just be a passive investor, you can buy an ETF, an electronic traded fund. Basically, it's just a group of funds that that's grouped into one. So it might be 100, 500 companies like the S&P 500, and that the price doesn't change that much because it requires a different price action for multiple companies. So it'll be a lot harder for that price to crash and also a lot harder for it to go up. So it's more stable over time. But if you're in it for the maximum gains, that's not going to be the option for you for the most part. And tip number 3 is investing mindset. Now, honestly, that's such a cliche statement. It's very annoying sometimes, but that changes everything. You really have to understand that you're investing in a company and not just a ticker symbol. Now, if you're a trader, if you're doing day trading, you might think of things differently. But of course, I don't do day trading. I do probably short term, typically between a few months, maybe sometimes a few weeks. But I typically stick with that same stock and just buy the dips and go in and out, in and out, in and out. And then also I have long-term plays as well. First thing about having an investor mindset is understanding that investing has its risk. Now, I know everyone just, especially more lately, everyone's jumping on stocks, everyone's jumping on cryptocurrencies because they just see all their friends making money. They're like, if they ain't making money, I know I can fucking make money, right? The thing is, there's so many stories that people don't tell you of them losing money. I try my best when I post about my wins and my losses, because I have a lot of people asking questions about investing, but I definitely want them to understand that it's not all sunshine and roses. You have to understand that you will lose money, but make sure you limit those losses. But enough of the doom and gloom. You have to realize with no risk, there is no reward. So the biggest thing that I love from Warren Buffett, who is a big time a fundamental analysis when it comes to companies. He just thinks about the brick and mortar of the company. But his philosophy is he doesn't believe in the diversification. He said he feels like that's for idiots. What he does is once he tracks a stock, right, and learns everything about it, he unloads the truck on it. He doesn't just go in and buy a few shares. He tries to buy the whole company. So I don't know what your financial situation is like. So I believe that's also the thing that you need to get under control, is having your personal finances squared away. The traditional advice still stands. Make sure you have 3 to 6 months of expenses stored away just in case something bad happens. Because this is the thing, the game of stocks is very emotional, right? There's so many times I've sold a stock and bought it back 10 minutes later after it started recovering, because ultimately we're not perfect and we're all emotional creatures. I bit that bullet so many times, I hate it. But again, with that being said, we're here to make money. So the thing is, if you really feel strongly about something, I don't think you should unload everything, but put enough in there, put enough skin in the game, because it can really pay off. So I have a quick example about that paying off. So when the market first crashed last year, I bought a lot of United Airlines stock. Because the thing was, everyone was like, oh, who knows if the market's gonna come back? People are so scared.
No, the market's never coming back.
One thing that helped me get a better mindset is looking at the history. And see, this is the thing, right? Hindsight's always 20/20. You will see the stock market go up and down, up and down, up and down. But when it's over and you saw how it played out, you don't have the emotions because there is no uncertainty. You are certain how it happened. And everyone's like, oh, I should have bought the dip. Oh, I should have sold at the top. You would never have this complete knowledge. But the thing is, if you look at the history of the market, it constantly goes up and down, up and down. And this hasn't just been in the United States. This has been in ancient Rome. Everywhere in history, there's always been booms and busts. The market runs in cycles. So having that mindset and understanding, hey, look, I can potentially lose money, but it's worth the risk. I'm going to take it. I'm going to take a measured risk. I'm going to do my research, but I'm going to let it go. I'm going to think about the probability and place my bet. All right, so that's my top 3 tips about investing for beginners. And so, like I said, I'm going to go over really quick how to update a stop loss in Robinhood.
All right, so here we go really quick, right? We're going to log into the app. And then I'm going to scroll real quick, and I'm going to set up a stop loss for Solar Edge. This is a quick solar company I'm pretty fond of. But anyway, so you hit the top right, you see where it says shares at the top. And now if you have to scroll down, right, you see the option for a stop order. And so this particular option is for a stop order for a market sale, meaning that once it hits that price, it's going to try to get the best market deal available. So in this example, I'm going to set it at $300. The current price is $334. But the default is set for in the morning. It will cancel if not executed. But I want to set it to good to close. So basically forever or 90 days according to Robinhood. But yeah, we're going to review it and we're going to swipe up. And now the order is going to be in the queue. And so whenever it hits $300, it's going to execute.
All right, so as promised, if you made it to the end of the video, I will reveal to you the stock that's made me over 400% this year alone, and that stock is Riot. So Riot is a company that performs operations by basically mining Bitcoin. They engage in purchasing a whole bunch of mining rigs. So all they're really doing is running and securing the network by applying a whole lot of hashes and processing all the transactions on a Bitcoin network. You can see how they are making a lot of run up. If you've been recently following, the price of Bitcoin is over $50,000 right now already. And I'm a big component of crypto space. I love cryptocurrencies, and I just really see it taking all the way off. The reason I say that is because even now at $50,000, Bitcoin is not even close to having the market capitalization of gold, and it's not even last time they checked the numbers, not even 1% of the United States actually owns Bitcoin. So once you start getting that more adoption and more people starting to get on board with it, right? You already see the likes of Apple and Tesla purchasing into Bitcoin and becoming a mainstream player. You're gonna really see the price skyrocket higher than the $50,000 that's already in. The reason that Riot blockchain is able to pick up on those prices is because everyone understands that if they're mining Bitcoins, where they're creating Bitcoins and they now own them, if the price goes up by itself, they're gonna make them an extremely profitable company. Definitely if Bitcoin hit the target price of 100,000, 500,000, and even $1 million, which some people are projecting to be. I'm not necessarily saying it's gonna be that high, but it's definitely gonna be a lot higher than I think anyone has ever imagined. All right, that's it. I really hope you liked the video. Again, please subscribe to the channel. I really enjoy making these videos. I really enjoy sharing and researching. I'm learning so much just from making these videos myself. But again, thank you for watching, and until next time.